America's veterans have served and sacrificed for this nation. Yet when it comes to homeownership, one of the cornerstones of the American dream, many find the path steeper than ever. A new analysis from Redfin reveals a stark reality. Just 22% of U.S. home listings are affordable for the typical military veteran using a VA loan. Now, that's a slight improvement from last year, but it still means nearly 4 out of 5 homes remain financially out of reach. For veterans across the country, the housing market has been absolutely brutal since the pandemic housing boom, but there's a small glimmer of hope on the horizon. Affordability has finally started to improve. In 2023, only about 20% of listings were affordable for VA borrowers. Today, that number has climbed to just under 22%. Why the small bump? Well, for the first time in a while, incomes are finally growing faster than housing payments. Let's look at the numbers. The median veteran household income has climbed to nearly $86,000, which is up roughly 10% since 2023. At the same time, home prices have mostly plateaued. But even with those higher earnings, the progress is very limited. Home prices are still hovering near record highs, and even though mortgage rates have ticked down slightly from 6.81% to 6.66%, that small bit of relief is nearly enough to offset years of runaway price growth. To put this into perspective, the median U.S. home price has nearly doubled over the past decade. During that same period, veteran incomes are up only 48%. The math just doesn't add up. Now, VA loans are a powerful tool for veterans. They're a hard-earned benefit, and they offer some incredible advantages. They require little to no down payment. They don't have private mortgage insurance or PMI, and they often feature slightly lower interest rates than conventional loans. But there's always a trade-off. Because nearly 90% of veterans who use a VA loan put zero down. Their monthly payments are actually higher, even if the interest rate is lower. Think about it. A larger loan amount means a larger monthly payment. As Redfin economist Grishma Bodarai explains, VA loans let veterans get their foot in the homeownership door and start building equity. But that convenience often means a bigger loan and steeper monthly costs. This leads to a really interesting point. Veterans who choose to use a conventional loan can actually afford slightly more homes. Right now, about 26.5% of listings are within reach for veterans using conventional financing. That's compared to the 21.8% for those using VA loans. Some veterans opt for this route specifically because it allows them to make a down payment, which reduces their monthly expenses, even if they fully qualify for a VA loan. It's a strategic choice to manage cash flow. The contrast with the past is staggering. Go back to 2015. Back then, a veteran using a VA loan could afford 53% of all homes for sale nationwide. That's more than double what they can afford today. In 2015, home prices were modest, interest rates were low, and the market was much more balanced. Fast forward to today, after years of surging demand and very limited supply, and we see that affordability has been cut in half for America's heroes. So what happened? When the pandemic hit, historically low interest rates and the sudden shift to remote work fueled a buying frenzy. Prices skyrocketed, inventory completely plunged, and affordability collapsed across the board. Then, as inflation surged, the Federal Reserve's aggressive rate hikes sent mortgage rates soaring, topping 7% at their peak. The result was that homeownership became a luxury for many, including those who once could have comfortably bought a home with their VA loan benefit. But here's one surprising silver lining in all of this. Veterans are no longer falling behind non-veterans in the affordability race. The share of listings affordable to non-veterans using a conventional loan is 22.8%. That's just a hair above the 21.8% for VA users. In other words, the affordability gap between the groups has nearly closed. But it's not because veterans are suddenly thriving. It's because pretty much everyone is struggling in this market. It's a tough environment for all first-time buyers. Of course, affordability varies drastically depending on where you live. In Detroit, nearly 60% of homes for sale are affordable to veterans using VA loans. That's the highest share in the entire country. San Antonio follows close behind at 53%, with Cleveland, Pittsburgh, and Baltimore rounding out the top 5 most affordable metros. In these cities, median home prices are still within reach of middle-income households, making them relative havens for veterans seeking stability and a place to call home. But on the opposite end of the spectrum is California, a state where the dream of homeownership for veterans is all but gone. In places like San Jose, Los Angeles, and San Francisco, less than 1% of listings are affordable to VA. Less than 1%. And even if they use a conventional loan, the share barely rises above 1 to 3%. When the typical home in San Jose sells for $1.6 million, no amount of benefits or patriotism can bridge that kind of financial gap. Interestingly, despite these challenges, the use of VA loans is actually rising. This past August, 7.3% of all mortgaged homebuyers used one, but that's the highest share for that month in 6 years. Why? With the market cooling down a bit, sellers are becoming more flexible. They're increasingly open to buyers who come in with no down payment offers, especially when they're backed by the solid guarantee of a VA loan. This data really tells a larger story about the U.S. housing market. Affordability isn't really improving because homes are getting cheaper. It's improving because the market has essentially hit a standstill. Prices have flattened, rates have dipped just a little, and incomes have inched higher. But until housing supply grows in a meaningful way, any progress we see will remain painfully slow. The road to homeownership for veterans is still filled with obstacles, but the landscape is slowly changing. Markets like Phoenix, Atlanta, and parts of Florida are showing some early signs of relief as prices cool and inventory starts to expand. If mortgage rates continue to ease and new home construction ramps up, 2026 could mark the first real substantial improvement in affordability since before the pandemic began. So for any veterans out there who are considering buying a home, it's essential to understand the nuances of VA loans and their trade-offs. You need to explore both VA and conventional options, factor in your total monthly costs, and really target those regions where the math still works in your favor. Cities like Detroit, San Antonio, and Cleveland may not get all the headlines, but they're among the few places where homeownership is still attainable for the average veteran family. Housing affordability may have improved slightly, but for millions of veterans, the dream of owning a home remains elusive. The question isn't whether they've earned it. The question is whether America's housing market will ever make room for them again. If you found this breakdown insightful, don't forget to subscribe for more real estate analysis and housing data updates. Stay informed, stay empowered, and until next time, keep watching the market closely. Thanks for watching.